Hey guys, and welcome back. Today I am joined by Crypto Wendy O. You guys know her. She's one of the big analysts here on the YouTube space, and you have grown so much on YouTube over the last year and a half. You're at like, what, 170,000 subs now, 160? What is it now? You just passed 150, right?
I'm just trying to keep up with you, Jeb. Just trying to keep up with you.
Well, we're really excited to have you here today. Still in the home studio. As you guys know, there's a tropical storm going over. So we're going to be interviewing Wendy from my son's bedroom. Again, that's where we've been doing coffee and crypto the last several days. But you're here for the information, not the background. Wendy, we're going to talk about how to protect your capital during a bear market. Obviously, Bitcoin's gone through a massive drop down to 15.5 less than 24 hours ago. I don't know about you. I'm buying the dip because I want to go ahead and invest for the long term. But what are some tips that you have for people that are getting into crypto right now and they're like, man, crypto just dropped $7,000. I don't know how to not lose my butt, and I want to make sure I'm set up for the future.
So first and foremost, there's something that we have to differentiate. We have to talk about different trading investing strategy with altcoins, trading investing strategy with Bitcoin. Primarily for purposes of this show, let's talk about Bitcoin. If you want to invest in altcoins, you are going to have to really, really do your due diligence on this. Most of the coins that are in top 100 now, they won't be around next cycle. Jeb can probably confirm that.
Yep.
Data confirms that. So if you want to invest in altcoins, you really are going to have to see if it's a good fit for you, and you're going to have to make a decision based on yourself. One tip and trick I will give you is make sure to look at their tokenomics, make sure their code hasn't changed, make sure any of the roadmap, those things haven't changed, because what a lot of companies will do in these times is they will actually change those fundamentals, and then the project could suffer because they're trying to salvage it, etc. So if that's something you want to do, you're going to have to create a trading and investing plan. Now, let's talk about Bitcoin. Me personally, I want to accumulate as much Bitcoin as I can, but I want to accumulate it sub 15K. Sub 15K. I still do think we haven't seen capitulation yet. So I'm waiting for that. But at the same time, I am a big proponent of setting limit orders. The reason why is because the market doesn't care about you. Doesn't care about you, doesn't care about your feelings, doesn't care about your money, doesn't care about your family, none of these things, any way, shape, or form. But if you set limit orders, you have a little bit more control of where you're willing to purchase Bitcoin, et cetera. And of course, you have to indicate that in your trading investing plan. Dollar cost averaging is good too, but if you are going to dollar cost average, you still are going to have to indicate when you're taking profit, your disposable income, when you want to sell, how long you want to hold, any of those different things, because I don't think it's reasonable to just continue to buy Bitcoin and not have an exit strategy. Exit strategy could be at 50 years. It could be to hand it down to your kids, but I think it's important to indicate that just so you're not just dumping money in.
Love it. Absolutely. Yeah. You want to make sure that you have some kind of plan. I had a plan for the way that I was investing. I talked about it on my channel. I had 3 lump sums. I have a total amount of money I wanted to invest. I broke it up into 3 parts. Laddered in, got a position in Bitcoin, Ethereum, and Cardano on Tuesday when Bitcoin was at 18.1. And then got another position when Bitcoin was at 16.1, I think it was. Nice. And then, so that was only half of my second third. So there's another half of the whole portfolio I'm waiting on for it to go below 15K before I start to deploy any of it. Because I don't know about you, I'd love to hear your thoughts on this. I think 13,800 would make a lot of sense based on what we saw in Q2 of 2019. Is that a position you're looking at? Should people be looking for even lower lows than what we've already seen?
I actually have bid set all the way down to $9,500, and I readjusted some of them with some really, really stink bids at $6,000. Those probably will not get hit. The reason why is there's a lot of volatility on exchanges. We've got this drama with FTX, with Binance, with all of this stuff happening. FTX was a big market maker. Yes, big market maker. So when you're dealing with a company like this that is insolvent, that has gone down, there's going to be a lot of volatility in the market. I don't know what other market makers these companies, some of the other exchanges are using, et cetera. But we do see these things called scam wicks, and these things just dump down very, very fast, and your order could potentially get hit. Most of my capital is being deployed between $15,000 and $10,000. But again, I do have some stink bids for some of that lower stuff if I get it. I don't think that we've capitulated yet, Jeb. I don't think we have. And one of the reasons why is, have the miners capitulated yet?
Nope. Some of them have, not all of them have. There's a whole lot of them still online with it. That's what I've been talking about. You got FTX, Core Scientific, Argo Blockchain, Voyager, 3 Arrows Capital, Celsius, all of these different names. And basically their entire company had a liquidation price. If the market, they basically built their whole company on like they were running a leverage trade, and they got liquidated. And then you have 10 million users that are up a creek because they can't get their funds, and they're screwed. So that's what we're seeing happen in crypto right now. And like you said, I don't think that's over. I think that FTX going down is going to cause the price of Bitcoin to drop so much that a week from now, you're going to see a ton of companies and a ton of miners say, oh, when it went to 15.5, we can't afford to pay you back, and a bunch of bankruptcies are going to fall because the first domino fell and knocked over a bunch of them. So what do people do then, Wendy, when we have this environment going on, like a Luna collapse, more or less, different mechanics, similar consequence? What do people do in a market climate like this to protect themselves?
There's a lot of different things you could do. First and foremost, if you're holding altcoins and you haven't taken profit, you might consider needing to cut those positions, even if you're down 80 to 90%. That may sound crazy, but then again, you may feel more comfortable cutting those altcoin positions, using that capital to buy Bitcoin at these prices. That's not financial advice. That is just something you may want to consider. You may also want to consult with a tax specialist, somebody in your particular region, because if you do that, you might pay less in taxes. And that's really the goal, is to make as much money as possible, as ethically as possible. And again, I don't like taxes. I think they're terrible, but you have to pay them. So that might be a strategy you might want to do. Another strategy would be to go ahead and set limit orders. Another strategy would be to look at blockchain analytics and see what's kind of happening with these inflows and outflows with the exchanges. Another thing a lot of people don't talk about is a lot of the Bitcoin miners have taken these beautiful things out called collateralized loans. When you take out a collateralized loans, you have a liquidation price. And the reason why somebody would take out a collateralized loan is to kind of help with the tax burden and also get capital without selling your Bitcoin. If your collateralized loan gets knocked out, you do have to pay taxes on that. And that could be when we do actually start to see minor capitulation. So I think it is important to pay attention to a lot of different factors. I highly recommend do not make any trading or investing or any big decisions if you're feeling scared, if you're feeling emotional. And that's why having a trading journal is good, is you can journal down, hey, I don't really feel so great about this today. Market's making me nervous. You probably want to take a step back. And then you might want to revisit your trading strategy or investing strategy when you wrote that down and determine if that's a good strategy or not. Because a very good trading tip that I will give that no one likes to give, I think Jeb likes to give it though, is no action is an action. It's okay to be in cash.
That's right.
Stable coins are very dangerous right now. We saw the depeg of USDT earlier, which does happen. Stable coins, even though they're a lot more regulated, there's still a big, there's still a big concern with that. I cashed most of my stables out when the whole Terra Luna thing was happening into cash, because I was like, you know what? I'm not comfortable with this right now.
Yep.
And if I do miss out buying a couple dips, I'm okay with it because I protected my capital.
Yeah, absolutely. Hopefully we'll see a trend towards having proof of reserves, but a lot of companies seem to not want to do that, FTX being one of them, and now we see what happened. Would be really lovely to see complete, fully, as CZ said on Twitter, Merkle tree proof of reserves going on, happening over on USDT and over on USDC. We obviously saw UST collapse, and a lot of people are worried the USDT is going to depeg also, unless it has in the last 10 minutes. I'm not familiar if it did, but yeah, that's a really big problem that a lot of people are running into, is that you don't know what you can trust. And so, like you said, totally, no action is an action. Being in a cash position is totally a position, because you never know whether the CPI is going to jump up, and the Federal Reserve is going to crank up interest rates, and they're going to crash the economy. The job market is going to go to crap, and then you're going to need US dollars, even though they're in free fall, to make sure that you can pay your rent, or if you're a small business, to make sure that you can keep the lights on, keep your employees staffed. So yeah, being in cash is not a bad thing. Cash is king, and it always will be. And that doesn't mean the US dollar is king. It might not always be, but having a position in high liquidity is very important, so that you don't end up like one of these companies. So Wendy, let me ask you one more question out of the interest of time here. What advice would you give to people that are in the retail sector, based on what not to do that these companies have done? Because I see a lot of companies that are building leverage positions in the exact same way that people do with their portfolios, by over-investing. So what are some lessons that we as the retail can learn from these companies that are getting wrecked, so that we don't get wrecked in the same way?
Learn about disposable income. Figure out what type of disposable income you have to dump into the market. Create an investing or trading journal. Stay away from leverage. There's really no need to use more than 2 to 3 times leverage. If you want to use leverage, that's your business. I'm not here to tell you what to do, but I would probably be very, very cautious because of that liquidation, because of that stop, because of all that market volatility. Again, Investopedia is my favorite free resource, and I wish they would sponsor me because they're my favorite, because they put a lot of these really easy to read articles out that are a couple hundred words. They put pictures, and it's 100% free. Go to Investopedia, learn basics of technical analysis. Investing and trading is hard. You're not going to make a whole lot of money doing it at first, but you will eventually. But just and again, the importance is having a trading or investing journal and indicating different things that are important to you, because my position size is different than yours, and your position size is different than anybody that's watching this. And that's okay. We're all beautiful, diverse people, but at the same time, your job is to make as much capital as possible, as ethically as possible. And the best way to do that is to have a trading or investing journal and holding yourself accountable, and to also taking responsibility for your actions. And last thing, please consider, please consider using cold storage to store your long-term cryptocurrency and moon bags.
Yeah, no, we've never had a better time to prove why you need to be in cold storage than when FTX went under. Well, Wendy, thank you so much for your time. Any final thoughts you have for our viewers? And then obviously make sure that everybody knows where to find you, of course.
Crypto Wendy O, YouTube, TikTok, Instagram, Twitter, Facebook, you name it, we got it. We have a free newsletter that talks to you about all these things that I mentioned. Please support Jeb as always. Make sure you guys like this video. Please share it. I'm going to try to get Jeb on my channel soon. And again, you guys, please believe in yourself. It's good to hear what other people say. Hear what Jeb says, hear what I say, but please make decisions on yourself, based on yourself, instead of just following one person. It's good to hear lots of different perspectives, even if it's a perspective that you don't agree with, but that's how we learn and that's how we make better stuff. And God bless.
Love it, Wendy. God bless. Peace, guys.